Hi, my name is Allan Madan. I'm a chartered accountant and an international tax accountant in the Toronto and Mississauga regions of Ontario, Canada. Today's short video is about non-resident tax and rental properties. If you're a non-resident of Canada and you own a rental property in Canada, it's really important that you watch this video. I'm going to tell you everything that you need to know about tax for non-residents and rental properties. The first thing that you need to know is how to obtain a tax account number. It's really important to get a tax account number because the tax account number is used to track your tax filings by the Canada Revenue Agency. If you already have a social insurance number, that will serve as your tax account number. If you don't have a social insurance number, simply call the International Tax Services Office to obtain one, and they'll issue you a tax account number right over the phone. To find out the telephone number for the International Tax Services Office, simply go to the Canada Revenue Agency's website and you'll find it there. The second point that you need to know as a non-resident investor in real estate in Canada is withholding tax. Withholding tax applies at a rate of 25% on the rents that you collect here in Canada. So let's take a numerical example. Assume that you are renting a condo and you're collecting $1,000 per month on the condominium. The withholding tax will therefore be 25% or $250 for the month. The $250 of withholding tax must be remitted by the 15th of the following month. So if you collected the withholding tax in January, you have to remit it by February 15th. How do you make payment for the withholding tax? Well, this part's easy. You simply write a check made payable to the Receiver General of Canada. On the back of the check, write your name, social insurance number, and the year to which the withholding tax applies to. For example, January 2011. To obtain the mailing address of where to send the check, go to the Canada Revenue Agency's website and you'll find it there. The fourth thing that you need to know about non-resident tax and rental properties is the NR6 Form or a waiver. 25% withholding tax is really high, and I'm sure you were surprised when I mentioned that, but there is a way to reduce that withholding tax to a lower rate. Hence, you need to file the NR6 form or the waiver. You can obtain this waiver again from the CRA's website. On the waiver, you simply disclose the expected gross rents that you plan on collecting in the next 12 months and the expected expenses that you plan on having in the next 12 months. I recommend that you file for the waiver in about October or November, so that way you can receive it before January of the following year. Now, unfortunately, the CRA does not tell you the rate that they're going to reduce the withholding tax to, 10%, 5%, etc. If I knew the formula, trust me, I'd share it with you. But still, you should apply, even if you don't know how much it's going to be reduced by, because you will still have a tax savings at source. The fifth point that you need to know as a non-resident investor in real estate in Canada is how to obtain an NR4 slip. For those of you who don't know, an NR4 slip simply reports the gross rents you collected and the total withholding tax that you remitted to the Canada Revenue Agency. You have to obtain this form from the Canada Revenue Agency by no later than March 31st of the following year. If you don't obtain it by March 31st, you'll be subject to a penalty, which is something you want to avoid. The sixth point that you should be aware of is filing an annual tax return. To file an annual tax return, you could hire a professional such as myself, or you could do it yourself. The Section 216 non-resident tax return for rental properties is quite simple. It discloses the gross rents you've collected, the expenses, and expenses include such things as property tax, repairs and maintenance, utilities, insurance, condominium fees, and fees paid to a property manager if you have one. The difference between the gross rents collected and the expenses is the net income on which income tax is levied. The rate of tax is high at 48%, but there are tax credits that you may be entitled to. The withholding tax that you remitted previously will reduce the total tax payable that you owe. Now, the Section 216 tax return for the year is due by June 30th of the following year. So for 2011, it's due on June 30th, 2012. For 2012, it's due on June 30th, 2013, and so forth. I may be a bit biased, but I highly recommend that you hire a professional such as myself to prepare the Section 216 return to make sure you're not missing out any deductions and that it's done properly. I hope you found this video useful. If you did, I recommend that you go to my website after watching this video, the link which is shown at the bottom of this video, and you'll get a wealth of information on how to save tax and really cool topics that you'll find interesting. Once again, thanks for watching and have a great day.